Okay, hello and welcome everyone to MSDynamicsWorld.com's Fall 2015 Financial Automation Webcast Series. I'm Jason Gumpert, and joining us for today's event is Steve Chinsky. He is a industry solution architect at Columbus and also a NAV veteran and real expert. He's also a first-time presenter for us, though some of you probably know him from his other work in the community, including with NAVUG, and it's great to have him here today. I'd also like to take a moment to recognize our financial automation sponsors and thank them for their support of MSDynamicsWorld.com. They are Avalara, DocStar, Esker, Lexmark, and Metapile. And as we get started, I want to add that we do invite you to add your feedback and ask questions today during the presentation. Steve will be making time for questions. You can use the Q&A block that you should see to the right of the main slide window to ask your questions really at any point during the event. So without further delay, Stephen, let me hand things off to you.
Thanks a lot, Jason. All right. Hi, everybody. How you doing today? We're going to be talking fixed assets in Dynamics NAV. As Jason mentioned, I'm a senior industry solution architect. I've been doing NAV for over 16 years now, so back when version 2. As always, please ask your questions in the box below. I don't mind if they are entered along the way. I don't care, so we can stop and certainly discuss them. I'll always pause between maybe different sections to make sure there are no questions to be asked in that section. At the end, we'll go over certainly a way to contact me if you need to contact me to discuss fixed assets. I'm fine with people contacting me through my email. Certainly would love helping and supporting the NAV community on fixed assets or any area that you have a problem with. You can certainly find me on NAVUG as well and collaborate. So without further ado, let's go into the agenda. Again, we're going to go through a lot of the setup concerns here. Look at the fixed asset card, kind of give you guys a good overview of it and how it works. We'll talk about the depreciation book and maintaining the multiple depreciation books in the asset. We'll talk about different depreciation methods or methodology. We'll talk about certainly the most important thing, which is the posting groups, how else you're going to get your debits and credits to post correctly. So we'll need to review the FA posting groups. We'll talk a little bit about fixed asset maintenance, how you can actually record various maintenance expenses associated with an asset, record them and monitor them. We'll certainly go through and calculate depreciation expense for the books, whether it be GAAP or tax books. And then we'll talk about a little bit about next steps, what you should do in case you're beginning to get involved with fixed assets for the first time or even are involved with it, and you're having some issues. What should we do next? So without further ado, I'm going to share my screen. Just give me a second here. Minimize this screen, and hopefully everybody can see my Dynamics NAV 2015 screen. I think we're okay. All right, so I'm going to be under departments here. We're going to click on fixed assets. Let's talk a little bit about some basic setup concerns. What are some of the important things you need to set up right out of the box? So first and foremost, some things we need to set up our depreciation books. So let's talk about, go through the depreciation books real quickly. Most importantly, I like to go in there and set up two sets of books. One is the company book and the tax book. For those of you who aren't aware, NAV can support the tax book and record that for your tax accountant. If your accountant is coming in, certainly your external accountant comes in and needs a tax book. So let's review this very quickly. Here's our GAAP book. Of course, we have our code GAAP. Certainly fill in how you would like your ending book value, the default ending book value. Of course, you would like it to be up to the penny or 0, most importantly. Always make sure that you use the FA ledger check to make sure that everything is perfect or in check here and validated accordingly. Always check that box. It is a very important tool to have available to you to make sure that when the posting takes place, it is performing a validation check. Make sure you do check this. I like to make sure that the rounding for periodic depreciation is checked, and the reason I want that checked is because when you do depreciation, especially if you're doing double declining or maybe you're doing a user-defined MACRS method, and we'll talk about MACRS a little bit down the road here, there is going to be a rounding. In MACRS, it's done by a percentage, so therefore there is going to be pennies that need to be rounded. So make sure that it's properly rounded and accounted for during your periodic depreciation. So make sure you check this box, use rounding. And most importantly, make sure that your fixed assets and general ledger are in check, and make sure that both posting dates are the same. You don't want them to be out of sync, and you're going to have to, analyze this and find out why things are out of sync between the general ledger and fixed asset subledger. A couple of things to consider, excuse me, is integration. The fixed asset granule, or the subledger, is fully integrated with the general ledger. And most importantly, you should always make sure you check all the boxes you would like to fully integrate. I always check acquisition cost, because both when I record them either through the FAGL journal, or if I'm going to record them in most cases through a purchase invoice or a purchase order, I would like the two to be fully integrated and record the transactions both at the subledger level of the fixed asset system and the general ledger. Depreciation, that's a must. You must check this box, because when you run the calculate depreciation, you'll make sure that it does post to an FAGL journal and then record the transaction inside the general ledger. Write-downs, I always check this box only because when I do a write-down, if I happen to have a write-down, I want to make sure that it is posting it to the general ledger using the posting groups, and I always check this one as well. Maintenance, disposals, custom, and the two custom ones here, and appreciation. Again, depending upon how you run your operation, you could check them or you could not. Disposals, most people do check that one only because when you want to finally dispose of that asset, whether you're selling it to somebody to have a cash, making a deposit, or whether you're just disposing of the asset permanently and you're just disposing it, meaning throwing it away, certainly you'd want to make sure that it's integrated to the general ledger to make sure that you take the asset off the books after it's been fully depreciated at the correct book value. Let's go through it.
Question?
Absolutely, go ahead.
If a tax book has never been set up in the previous system, is it too late to set it up here?
It's never too late to set up a tax book, even if you're 5 years down the road and you finally realize you can use tax books in NAV. The reason I say it like that, and I'll certainly give you an example when I get to the tax book here, whenever anybody is setting up tax books, or even the GAAP book, when you're converting to NAV here for the first time in fixed assets, you might be coming off of another system, another fixed asset system. It's best to rerun all the depreciation when you're setting up NAV for the fixed assets for the first time. Let NAV calculate all your depreciation, whether it be GAAP or tax. And then when you finally get caught up, then you'll analyze it. And of course, you're only recording depreciation here in the subledger, not in the general ledger, because your general ledger is accurate. But you'd go through, run all your depreciations, both tax and book. And then whatever differences there are, you can certainly we can adjust the depreciation accordingly by asset to make sure that we're in sync with the general ledger. Your accountant might want you to use NAV instead of certainly what you've recorded, but you can certainly go through that and you can get that caught up, but you can do it at any time you're ready. Duplication. Duplication, you would only fill this out for a couple of reasons. One is, if this is a book that you want it to be part of the duplication list, like the tax book. Certainly, if I record an acquisition of an asset and I'm recording that into my GAAP book, I would want it to make sure that in my duplication list I see the tax book so that I don't have to book things twice. So I can certainly ask it to be duplicated, the acquisition entry to be duplicated in my tax book. And then, of course, the final tab is reporting if you're using additional currencies. So we'll skip this and move on. Let's just jump over to the tax book real quickly. Nothing different here at all in terms of the setups. The only thing is you do not have to check any of the integration points here because of the fact that most everything is going to be coming from your GAAP book and duplicated into your tax book. So there really isn't any integration. You're not recording a tax general ledger entry, so therefore you're not really integrating it with the general ledger. So you wouldn't have to check these boxes. And of course, in my duplication, I did make sure this is part of my duplication list to choose that so I can record the entry in my tax book as well as my GAAP book here. A couple of other methods. Let's talk about the depreciation tables here before we go a little further. So I mentioned a little earlier, I've got my MACRS tables set up here. These are user-defined depreciation tables. In addition to that, of course, we have our straight line depreciation, double declining methods in the system out of the box, and you'll see them when we get to our fixed asset card. But for all these MACRS methods, which a lot of organizations today are deciding whether to, a small business might say, I'm going to record my GAAP as MACRS to be in sync with my tax. Therefore, instead of having straight line or double declining, they might just record everything as MACRS here, which is fine. It is an allowed methodology for accounting reasons. But here is the full MACRS list. You've got MACRS 31.5 years. You've got your 5-year, 7-year. You've got your 39-year, 10, 15, and 20-year, and your 3-year. You basically can set all of these up with mid-year conventions and bonus depreciation if you'd like. It is allowed. We'll talk about this at the end. If you'd like to get a copy of these tables, I can send them to you in an Excel spreadsheet, and you can upload them using a data port or a Rapid Start, depending upon the version you're in, if you're on 2013 or higher. And I can send them to you, and we'll talk about that at the end. But again, the nice part about setting these up is, of course, they do follow the IRS MACRS table regulation for the different code type. And you would define these when you set up your fixed asset card. I'm just going to scroll up and down, just showing you that the percentages, you'd set them up both in a yearly basis. And of course, all the different periods are set here with all the different percentages per the IRS regulation of MACRS in 31.5 year with an April acquisition date. Let me jump off this, and we'll jump over to now the fixed asset list, and then we'll start showing you some of the activities and things you can set up. So here's my fixed asset list. And again, this is 20. You'd see this in, if you're in the RTC mode, we've got your list. Anybody who's in classic mode, certainly you would go to the first fixed asset card, and you can hit F5 for the list. But here's a list of all my fixed assets. We're going to open one up so it can explain this to you from top to bottom. And if anybody has questions about the asset card, certainly type them into the Q&A box, and I'll certainly answer it. So again, you pick your fixed asset number here. Description, pretty self-explanatory. Serial numbers. One thing I do recommend is, there's a box here called responsible employee. I like using that. I mean, when somebody's auditing assets, and don't get me wrong here, when the accountant, or if you're in a larger organization, you do have to go around finding out who's got the asset. It's probably important to know who actually has that asset, or who the last person who had it, so you can go and actually find it along the way when you're doing an asset check. So you're trying to audit your assets. So it's important to put who has it here. Another important thing is when you are recording all these assets, and you're filling them out, you will be able to fill out certain other fixed asset fields to define who does have the assets. And in addition to dimensions, we'll talk about that in a second. So again, you'd come down here and you've got your line section. This is where you would set up the asset in terms of how it's going to be defined in NAV, how it's going to post all the debits and credits, and how it's going to record its depreciation. So let's talk about this for a couple of minutes here and go through this from left to right. So again, I pick my depreciation book. I've got a GAAP line here, and I've got my tax line. Now, in addition to setting up tax, for those of you who want to start setting up tax, I only have one book. I will tell you that in all my implementations, I actually set up 4 books. The reason I set up 4 tax books is because with the IRS as well as the state, you're allowed your bonus depreciation and your AMT you have to account for. So, with the federal, you've got your federal MACRS and you've got your federal, AMT bonus level, as well as the state. Each one does apply MACRS to it, but it applies the bonus depreciation a little differently. And how it's calculated, as well as the percentages do alter just a little bit when it comes to AMT compared to the MACRS. So be aware that when you do set this up, you'd probably want to ask your tax accountant how many tax books they would like set up so that you can record all the tax based on the methodology, whether it be with bonus, without, as well as the AMT for state and federal. So here I've got my books defined, my posting groups. We'll talk about this in a second. I'll go back to this after I finish the rest of the item, fixed asset card here. Again, you'll pick your fixed asset posting group, and we'll set this up. Each one of these posting groups, as you know, just like in all posting groups, it defines where all the debits and credits will be recorded to, both for the fixed asset as well as the accumulated depreciation and depreciation expense, the write-off, any write-downs, appreciations, and disposals. and also maintenance, but we'll talk about that in a second. Again, depreciation methodology, very important here to actually make sure you pick the right one based on how your organization is recording depreciation. Obviously, in most cases, most people pick straight line. It's the easiest to do from a GAAP perspective. Some people do the double declining one and double declining to straight line, which is a very popular also depreciation method for people who want to get the recording the asset a little higher in the expense side up front and then down to straight line thereafter. User defined, you will only pretty much pick this when you have defined your own private tables like I've done in my MACRS. This is where you're actually going to pick the MACRS table you would like, and you'll see that in a second. So this is a very popular one as well. First user-defined depreciation date, you only pretty much need to fill that in when you're doing a user-defined method. It is not necessary when using a typical GAAP depreciation methodology. You'll enter your first depreciation start date and end date. Navision will calculate the number of years or months. There is a column for months, and I'll show you that in a second. Here, you could also enter the number of years here, and the end date would have self-populated as well. The book value will always be a flow field, or basically a field you cannot edit. You can always look into this and see all the transactions by clicking on the number, and it will pop open the fixed asset ledger entry table, just like a general ledger entry or a customer or vendor ledger entry, and you can see all the transactions that have taken place through the history of this fixed asset. We've got our acquisition and our depreciation entries through the months all the way up until the current period. As I mentioned earlier, when you're on a user-defined line, you will end up having to have a field called depreciation tax code, where you will click in and choose the method you would like to choose here, so that it'll know the exact rates that you've defined in the user-defined depreciation table on how it will post depreciation expense.
Question, Steve?
Absolutely. Go ahead.
Steven, sorry. Does declining balance 1 or 2 ever fully depreciate?
When you pick in terms of declining balance 1 and 2, does it get the balance down to 0? I believe that's the question. The answer is going to be yes, depending on how you set up your, in the fixed asset setup or the actual depreciation book setup. There's a question here let me go back to here, I'll show you, open up the book real quickly. So one of the questions was, obviously ending book value. If I set my ending book value to 0, it will finally depreciate down to get rid of all of my asset. If I set this ending book value as $1 or $10, it will stop depreciation when I hit like $1 or $10 if I set that here. So it will depreciate down to the value of 0 using the method of declining balance 1, declining balance 2, especially what I call the double declinings down to a straight line here as well. Let's go and let me show you one other thing here. Some of you who certainly have been around the RTC, anyway, the NAV world. One other method here you can go down here and you can certainly pull additional fields, especially the number of depreciation months. I can add that into the screen. Of course, it automatically comes back and it sees that you have 60 months or 5 years. So as I mentioned earlier, you can, if I entered the 5-year, it would have known that it would have taken 5 years from 1/1/26. It would have put in 12/31/20, or I could have typed it in or picked it from the calendar pop-up window. Of course, you have to set up your posting groups. I've got my fixed asset class here. If I want to record everything into a certain class, I recommend this highly, only because when you run all of your fixed asset reports, you will have the ability to filter on FA class, FA subclass, FA location. This is going to be critical for probably most of your accountants who want to know the class of assets, cars, buildings, leasehold improvements, computer equipment, hardware, furniture. You can break this down into the most finite level, both for your accountant as well as internal reporting, to keep track of all those things to make sure that you're classifying an asset and picking the right posting group to make sure it's being depreciated over the right methodology. Subclass, of course, this is where you can break down your classes furniture, fixtures, and equipment. Again, maybe you want to break it down into telephones and file cabinets and desktops and stuff like that. FA location, for those of you who have multiple locations, or maybe you want to break this down by department because you're actually going to record depreciation expense by department, you can break that down here and at least show what location, FA location, those assets are located in, especially when you're doing an audit of those assets. As you know, dimensions, make sure you set up all your dimensions as to where they're going to go so that when you do your postings, all your expense as well as any additional disposals, any write-ups, appreciations, or write-downs will be recorded to the proper dimensions affecting that department who might have purchased the asset and owns the asset. And last but not least, one other category here. I love this one here. For those of you who've never even known this was available, there are two kind of like secret little features in NAV fixed asset that probably are the most underutilized. One is called insurance, and one is called maintenance. Maintenance allows you to record who maintains the asset. So for those of you who've got large pieces of equipment in a manufacturing plant, or maybe who have printers or computers, and you want to maintain these or they're being maintained by an outside vendor, you can set up this maintenance, and you can actually set up the next service date, put a warranty in place. You can also, with insurance, notate that each different fixed asset might have an insurance policy, when it expires, and when the actual invoices come in for both maintenance or insurance, you can record those transactions into the maintenance ledger and as well as the insurance ledger to record, to show that those assets have had additional maintenance to them, and you can monitor those in the maintenance ledger entry as well as the insurance associated with that in the insurance ledgers. Step off of here for a second, off the fixed asset card, and we'll move forward. Any questions before I jump over to another area? Any questions? Nope.
There was one question just going back to the book again.
Go ahead.
It was asking why. I mean, I think in the first screen that you showed, why wouldn't all the boxes be checked off?
We'll jump over here real quickly. We must be talking about this general tab screen. Are we asking, is that the general tab?
I believe so. I believe so.
Why wouldn't I have checked every one of these? Okay. A lot of these, well, this one is really dependent. This one is solely dependent on what your methodology as well as what your policy is going to be when it comes to a purchase invoice. For instance, this one says subtract the discount in the purchase invoice, meaning if I have a discount related to the asset that somebody's given me a 10% discount, maybe if a payment discount, or maybe if I'm also, maybe they just gave me a discount in general, will I subtract that discount in the purchase invoice to record this asset, or am I using the full value of the asset versus maybe I got a discount today, but if I have to buy it tomorrow, I get to pay full price. So again, this is a personal preference. I'm going to tell you that yes, I mean, obviously if I'm paying $90 versus $100, that's what the asset is going to be depreciated at, $90. But again, this is just a question, should it be automatically deducted? Allow correction of disposals. Will I allow NAV to allow me to go back and correct disposal if I made an error? In most cases, you are going to check yes here, but again, you might not. It might be something you just don't want to do or allow a user to do this. Allow changes to depreciation fields after they've been predefined. I personally don't like this. I think this should be locked down, and if there's an error, go back and correct your error manually. Do you apply tax on the net disposal entry, meaning am I going to apply tax, basically tax, meaning physical sales tax on the net disposal of any sorts? If I'm selling an asset for $10, am I going to apply some sort of tax on that, yes or no? That's what it's asking here. This is not tax book. This is called sales tax. Will I allow identical document numbers in the system? I mean, I don't know why this question is here. I believe, to me, it was kind of one of those oxymoron questions. Why would I ever want to duplicate a number in all of NAV? Because everything should be built on a number series, so I've never checked this box.
Stephen, the person who asked that question just sort of spoke up again. I think he was most curious about the GL integration.
Okay. Why wouldn't I? I mean, for Custom 1 and Custom 2, I would never check those boxes, only because if you're not using the custom methodology or creating custom books, then there's no reason to check these two boxes at all. To me, I haven't checked these probably in all my 16 years of doing fixed assets. I've never checked these two boxes. Maintenance, again, if you want to use maintenance, I would integrate it, because how else are you going to get your purchase invoices or purchase orders back here to integrate to the fixed asset book? So the answer would be yes. Disposals, I've always done disposals only because I've always disposed of my assets using the general ledger to, of course, eliminate the assets. So for the first three, I've always done yes. Appreciation, it's been dependent upon the organization I've worked with, but I always say yes unless there's some underlying reason you don't want to, and then of course the last two I always say yes.
And someone asks, is the parameter allow correction of disposal a new parameter for newer versions?
Yes, all of these new questions here. Do I allow changes to depreciation fields have been added in I believe it was 2013, I believe they came out. I'd have to go back and check, but I believe most of these new questions up here have all been added in the newer release. Subtract, the correction of disposals and changing the fields. They were not in the older releases. People who are on the call who maybe on a version 4 or version 5, an 09, 09 might have had some of these questions, but I'd have to go back and look individually to see if they're there. The fiscal year, some of these fiscal year 365 was not around in the older version, much older versions, and again they were added in the newer releases. I think 09 started most of these questions to get more enhanced for the fixed asset side. All right, let's move forward. Again, we talked about our depreciation fixed asset card. We talked about our books, a little bit about our classes. Again, it's important that you do set up your classes. I recommend, again, filling out all the different classes of the system to make sure that you choose a class that obviously both you want to report on as well as designate for both accounting and certainly for your accountants and internal reporting reasons. So again, make sure you pick the right class. It's good to, it will help you making sure that if you do see a journal entry and it's reported in the wrong class, it helps you do corrections. I've seen this work in a lot of the organizations I've been in. Again, fixed asset subclass, which goes hand in foot with the class. I do break them down into much more detail, only because I think it's necessary to show both the fixed asset class and subclass together here. So if I've got a financial asset and I want to show it as a car, machine, or telephone, or maybe I've got equipment and I want to furniture, fixtures, and equipment, I want to break it down into a much more finite level I can. It will be asked of you, certainly for those of you in a larger organization, to break this down for the external accountants to make sure that you're properly recording your assets correctly, both for GAAP and tax reasons. So they're going to actually go through and determine the MACRS anyway, so make sure they can file your tax return correctly. Insurance types, I talked a little bit about this. You can set up an insurance type for all your assets. You've got car insurance, fire insurance, maybe machinery and theft insurance. This is pretty important, whereby you're setting up the different insurance types so that you can actually record those insurance invoices that come in the door. I'll show you that in a second. I'll open up one asset just to show you how you can set that up, and of course record them to keep track of those. And so if you want to look at it from an insurance analysis perspective, you can run a good report on insurance analysis to see all the assets that are insured, when the insurance policy will end, and you'll keep track of those in terms of also the value of the insurance policy against the value of the asset.
Stephen, we have a comment that came in that I just wanted to relay.
Go ahead.
It pointed out that many fixed assets move throughout the year. In order to accurately complete business personal property reports at the end of the year, it's very helpful to add a new field to the fixed asset table every year for the BPP tax location. It's a code field that this person uses. Not sure if you can read it, but it just says he updates that value with the value of the location code on each fixed asset as of 12/31 of that year.
Oh, that's really cool. I like that idea. I mean, that extremely helpful. I like that in terms of going in every year and making sure that you fill it in, and he just updates it every year. He does. After he closes his books, or around the, I'm assuming around the time he closes his annual year. I like that.
Mm-hmm. And just to add, you can then use that field to run fixed asset reports. Was the end of that comment?
I mean, for those of you on the call and listening, I mean, the more you use NAV, I think anywhere in NAV, first of all, the more you can expand upon your reports immensely by just either using all the possible fields that are available to you, or even creating a field that you can use to help filter and run reports, especially in fixed assets, which is probably one that is always necessary to filter on to get to the answer. Again, maintenance, make sure you set up all the different maintenance, service, and spare parts here. I'm going to go through and show you one in a second. And again, here, I love setting these up depending on all the different maintenance areas. I mean, I know I've only set up 2 here for you, but for those of you who do a lot more maintenance, both in the manufacturing world or even in the supply chain world, where you've got conveyor belts and you've got palletizers out there, and you've got forklifts, and you've got racking systems, different people who might record different maintenance. Set up as many as you can, only because it'll keep track of things, and you can report all of your maintenance analysis against an asset to see all the times you've had to go and fix something. So for those of you who have a laptop and you're pouring coffee on it every 20 seconds, you can find out which person obviously drinks too much coffee. All right, let's jump out here, and we've talked about various setup tables, but I want to go into much more detail now and talk about the FA posting groups, which is my second favorite place. So for those of you who've never gotten there before, of course, we go to our admin screen. We jump over to financial management, and we open up our posting group section, and you'll see your FA posting groups at the bottom. Here's a simple example of one. Certainly you can expand upon them much more, but I'm going to give you a hint. For the most part, I don't recommend sitting here making 1 million of them unless you feel it is truly necessary to have multiple classes of fixed asset posting groups, meaning you want to break everything down to the most finite level in terms of, I want to break the telephone equipment, furniture, maybe just furniture, the word furniture versus furniture, fixture, and equipment. So if you've got furniture, fixture, and equipment is being depreciated over a 7-year life, and maybe the PCs are going to be depreciated over a 3-year life, and machinery might be a 9-year life, again, break them down only as it relates to, in my opinion, depreciation. That way, it's easier to both run reports and certainly take care of it's easier to maintain this one posting group, which most likely you'll set up once in the beginning. So again, we've got our posting groups. Let me show you another little trick for those of you who've never seen 2015. I'm a creature of habit. I like 3 rows, and I certainly want to set my entire system up. And so by clicking that, again, just repeat myself. Choose the height, go to 3 rows, and then apply it to everywhere in all of NAV. You can do that in 2015. Just information for those of you who are upgrading and or moving to 2015 shortly. Again, we've got our acquisition GL account, our depreciation, accumulated depreciation account, acquisition cost, accrual on disposal. Here it's basically where I'm going to book my disposal part, accumulated depreciation on disposal, the gain on disposal, the loss on disposal, and of course my maintenance account, which I talked about earlier. Again, I'll show you the maintenance, where it's going to record maintenance, and of course my depreciation expense as well. Again, my example, though I repeat a lot of accounts, the most important thing is to go in and certainly look up using your chart of accounts and find out where, how you're going to fill out your fixed assets and break the different assets down, vehicles, accumulated depreciation, operating equipment, and how you want to break all the different assets down into however you just design your chart of accounts section. Any questions on posting groups? Are there more? Oh, go
Sorry,
ahead.
Stephen. Well, I guess this is, again, kind of more of a comment, but along the personal property tax line, our company must have asset fields defining the exact tax jurisdiction of each asset placed. That's just what one person in the audience was sharing about their setup.
That's interesting. So really what you're doing is you're defining the actual jurisdiction so that when you do file your personal property taxes as well as for the building or for the land, they're obviously recording it where its jurisdiction is taking place so both they can file their, I guess personal property tax returns. That's interesting. I've never done it that way before. That's a great way of expanding on the word location, I guess, in terms of using location as well as maybe an extra field for the personal property tax value. Maybe it needs to do a geocode or a specific tax code that maybe the local taxing authority is supplying them with. Interesting. I like that idea. That's pretty cool. I don't remember that one. I'm going to steal that one for that person who threw that out there. I like that. Again, go ahead.
So just as a follow-up, he said we have tens of thousands of machines in various jurisdictions, so jurisdiction is critical for their situation.
All right. One other thing to mention, yes, I am only showing a very small handful of accounts that could potentially be set up. There are a lot more accounts. For the most part, the majority of these extra accounts, custom, write-down accounts certainly are going to have to be set up when you're using your write-down. It's important that you set your write-down account up where it's going to record the write-down when we do record one, as well as the fact that in addition to the write-down account, if there is appreciation, you will have to enter your appreciation account. For the most part, the main accounts are on the screen in front of you. You will need to do, excuse me, basically the write down and the appreciation are the two other ones that I have not added here, but are going to be necessary for those of you who do a lot of those transactions. And again, please just right click, choose column, and of course add the appreciation account to the list and fill in the correct GL account when you appreciate that asset. All right, let's move forward after the posting groups. Let's go back to our fixed asset card. So we'll open up financial management, fixed assets, go back to our fixed asset card briefly. We'll open up Mercedes again. Talk a little bit about these entries here. So we'll open up our ledger entries. Again, we showed you before. Again, here in the ledger entries, obviously, you can pick any one of these. For those of you who've never been around this before, certainly you can click on the navigate button. And of course, in this case, it's going to open up the record and making sure that I've got my posted invoice. And of course, I did record this from a posted purchase invoice. That is allowed. That's where the integration comes into play, in which I can actually go into a purchase document. Under type, I will have chosen fixed asset, not general ledger account, not item, but the fixed assets. Make sure, number one, when you're doing this, for those of you who have done this before or have never tried this before, I'm going to give you fair warning. The clerk in AP who might have that invoice is going to sit here and say, okay, I'll pick fixed assets. They're going to come to the number field, and they're going to say, I can't find the asset. That's because you have to set up the fixed asset card before you apply it to the purchase invoice. Make sure you do that ahead of schedule and that it is available so the person can pick the asset and record the actual transaction. So you're pretty much setting up your fixed asset card before you post the purchase invoice. For those of you also who are new to NAV or who are just learning fixed assets, just like in any other subledger or even in the general ledger, you can certainly click on my general ledger fields and see all my transactions here. Here it took the FA posting group, of course, that it knew, and it said, okay, I'm going to debit increase during the year, increase my assets during the year. I'm going to offset it against my payable account. And of course, here it said it made a payment. It made a payment, of course, later on this asset showed it made a payment to that person for the actual invoice in question. You can see also that in addition to posting my vendor ledger subledgers, it also went into the fixed asset ledger to record that transaction, which you saw earlier. Here's the acquisition costs. I think most of everybody on the phone, I hope, is not, probably already knowledgeable in navigation and looking at the source documents. So if there's any questions, certainly jump in. If not, I'm going to move forward. We're going to all right. I'm going to talk a little bit about maintenance now. We've talked about the fixed asset card. We talked about how to depreciate, how to set them up. We talked about how to set up. We're going to talk about a little bit about maintenance right now, and then we'll come back and we'll talk about depreciation, some other things in the journals. So how do you record maintenance? So again, we've got my asset here. I showed you before that I've got a vendor I've pretty much predefined that I do all my maintenance against. And again, this looks up to, of course, the vendor list, which is where I'm just going to pick my vendor that I'm choosing. I can record the next service date. Again, if it had a warranty in place, in case this is a car actually, or maybe I bought a table and it's got maybe a 6-month warranty, I could put that in place as well. And this asset is under maintenance, so when I record transaction, it's going to record them in the maintenance ledger entry table in terms of what it's going to record here. But, excuse me, everybody. Let me jump over to payables. I'm going to open up a purchase invoice, and I'm just going to show you how to record a purchase invoice. It could be a purchase order as well, against a maintenance item. So again, I've got my fixed asset here. I'm going to record this as a maintenance posting type. Again, it's going to be depreciate. I'm going to depreciate this. It's going to pull in all this information from this asset in terms of recording the maintenance piece. Again, it's got its maintenance type. It says maintenance, not an acquisition cost. It knows that maybe I perform maintenance. I put a new. In this case, it's not the most perfect example of an oil change, but in this case, if I do want to change, let's say a forklift engine or maybe a conveyor belt engine, and I'm going to want to depreciate that additional maintenance against it, it's going to obviously record it in here. The maintenance, of course, the price, excuse me, how much it is, and of course, I'm going to go over here, and if it was insurance, I can certainly put my insurance number, but I'll show you that in a second. It's more for insurance policies, obviously. So I record this and post it through, and it's going to record the entry, again, in the maintenance subledger in the system because it's a maintenance entry accordingly. Let me jump back to fixed assets, talk a little bit about insurance. And again, these insurance lines here, open up the machinery insurance. You would set up an insurance card, just like a fixed asset card. It's basically, I call it the insurance policy card, where you can set up an insurance policy where its effective date, it has an expiration date, what it is, how much is my premium, what does my policy coverage include, how much the policy coverage is, certainly the different classification categories associated with this policy. And from there, you would actually attach this policy number, insurance 40, against the fixed asset card. So if I go back to my fixed asset card, of course, I may pick a machinery and maybe this conveyor belt. And if I go down, and this one's not insured, but of course, if I wanted to use the insurance, if I wanted to attach this asset to the insured, certainly I can click here and would actually pick and include that insurance policy in my classification here so that I can know that this asset is insured in the system. I would have to actually set it up and attach it to one of those policies. Let me step back here, show you this one. Again, here's the original invoice for the acquisition of that car, $53,000. It is recorded in the insurance coverage ledger entry to show that that was the asset that it was booked. I included my insurance number when I posted my purchase invoice, whereby it obviously, if I navigate, it would bring me back there. But that's what links the insurance policy to the asset to the fixed asset card, to the insurance subledgers, to the total value of this insured. The acquisition cost is the value of what's insured for this asset. Any questions on maintenance or insured before I jump over to some of the ledgers?
No other questions at this point, Stephen.
Okay, so let's talk about the journals right now. The difference between an FAGL journal and an FA journal. FA journal is really the journal you will use to record transactions only inside the subledger, which means that whatever you record here will not hit your general ledger. It is your responsibility, of course, if you do record something here that you would like it to be updated in the general ledger, that if you are using the FA journal, make sure you do record it separately. It is probably only used more during the initial load process where I have to go in and load fixed assets, acquisitions, or depreciation for the first time, in which the general ledger's already got those transactions in it, and I need to just really populate the subledger. After which, for those integration points, the question that came up earlier about the integration, I will end up using, of course, my FAGL journal, in which any entry I make here will also be posted in the general ledger in the correct GL accounts based on the FA posting type. If I need to reclass an asset or reclass, I'm going to come in here and use my FA reclass journal, in which I'm going to pick an asset, and I'm going to reclass it. In most cases, you're really just reclassing it. Maybe you want to reclass this to a new location, or maybe I'm reclassing this to a new asset number because of, for whatever reason, that it needs to be reclassified and basically removed from the current asset number to another one. But in most cases, I've only used this journal pretty much just reclassifying the asset to a new classification where I want to take an asset and classify it under something different, or maybe I want to change not so much the new fixed asset number. If I am moving it from one fixed asset number to a new one altogether, I am going to use it here. But again, I mostly use it to reclassify people when it comes to different posting dimensions or whatever. I'm using this journal to move it around.
We have a question.
Go ahead.
Are there possibilities to undo a disposal?
To click on it like a fixed asset entry and click like an undo button. Currently, there is no undo button. You can correct things because of under the book process here. One of the things you saw was under disposals, allow correction of disposal. Pretty much what this allows me to do is I can go in there and fix a couple of things. But if I posted it through and it does affect both the general ledger as well as the fixed the FA ledgers, I can't undo it. To a degree, I can correct it, but I can't do a full correction. I'm still going to have to require a little bit of effort on my part to go in and correct depending upon what the correction is needed. I'll show you one if I can quickly. I don't know if I have an asset I can do. Let me see my switchboard here. Actually, I could. Let me try that. My switchboard here looks good enough. I'll just make believe I'm going to dispose of this asset altogether. So let's go into my FA. I'll go into my FAGL journal. I'll just pick it as blank. I'm going to pick my fixed asset, and I'll use my telephone. Hopefully, and it will come across my gap book. And of course, I'm going to dispose of this asset. I'm going to basically record it in here, and I'll just put it in $100 just for conversation's sake. And that's pretty much all we need. I'm not going to record any depreciation. I believe it might yell at me about my disposal, but let me just make sure it can. And I want to go, and I'm going to go pick. Let me just pick my disposal offsetting account. We'll just put in the decrease. And then let's go into that asset, open up the ledgers, go to, here's my disposal line on the bottom here. So your question is, can I correct this? Let's see. You cannot reverse the transaction because the fixed asset has been sold. So on a disposal, if it's been fully sold, this is one of the reasons I'm saying depends on what the error is. That's kind of one of the deficiencies. I'd like to see that in the future. In fact, I'm going to take that as a note and add it to the I Love NAV website, which is looked at by Microsoft. So hold on a second here. I'm just going to make that as a note. Correct disposition. And certainly, this is just a cancel entry. I mean, it's not going to, it won't work either because obviously it's been sold. I mean, I don't know. I'll just pick this and it's going to, can't do it because I can't specify a new posting date because I can't go back in time. But did I answer the person's question the way they wanted, at least fully enough?
Well, I would invite Frederick to let us know if that does answer his question. One other thing that came in, and I'm going to have to sort of paraphrase on it, but we're currently using a dynamic system. I think it means not NAV. We invoice ourselves at zero value for machines, which ultimately are taken out of inventory and placed into fixed assets by state, by account, by location. And the question is, how will that work with NAV?
You put all your assets into the system by, I hope I said this correctly, by state. Say that again, Jason. So state.
By state, by account, by location.
Okay. So to me, if I'm putting them in by state, by account, by location, for fixed assets, I have one of two things I would do. One is either I would set those up personally as location. I would probably use FA location, but to make it simpler, I might want to set up dimensions by state, account, location. Again, I don't know the full. I'm assuming these are for reporting reasons and as well as external reporting reasons, but I can also set up my dimensions so that they can report all those as well as make dimensional combinations so that, for instance, if I have a certain state and a certain account in a certain location, that maybe that combination I will not allow, so whereby keeping all of my, let's call everything in check, because if I can't pick a certain combination, but I would personally use dimensions, unless I'm overreaching this and I'm thinking you're setting them up more as maybe new locations where you want to set up I don't think you would set up all three as a location name, so I feel like I'm squeezing too much into one simple field here in terms of state, account, location. So I don't think of it as a class or a subclass like a car, like a furniture and fixture, and then furniture. I'm thinking of it as more as a dimension right now.
And just as a follow-up, this person said that they have tens of thousands of machines in the field, and from time to time we may dispose of an asset only later to find out that it was not disposed and that it was used in another location. And I guess the question is, how do you undispose, quote-unquote, or unretire an asset?
I've only unretired or basically corrected my disposals when it was done inadvertently and I found out after the fact. I've always gone back to that asset and I've actually had to put it back on the books at the net book value at the time with a notation that this was a correcting entry. Disposal never should have taken place. So I was effectively bringing it back in, writing it back up. Basically, let me show you. After you actually dispose of an asset, sadly enough, this asset, of course, has no value, and it's got a flag here, disposed of. The only way I can bring it back in is, it's still active, it's not inactive, but I'd have to bring it back in with a new acquisition value to basically bring that line back in and reactivate the asset. I cannot sit here and, basically, I can't sit here and say, I'm unchecking this box. It's been disposed of, so I'm bringing back in a new value for that asset with, of course, at the net book value that it was disposed of at. That's the way I've been doing it in the past. I know some other people have said to me they've actually created a new asset. They don't want to use the old one. They wanted to give it a new asset number, but I didn't understand why, because if the asset number stays the same and it's the same asset, you just made a mistake. Why would you create a new asset number? But I never understood that. I've heard from just other people using NAV. Some people have done it that way. Let me go back, and before we head towards the top of the hour here, just quickly want to talk about depreciation, because I know that's probably, when you think of assets, what else are you going to think about but depreciation? Calculate depreciation is a very simple process. Let me just walk through it quickly for everybody. Again, you pick your book, tax or GAAP. You pick what the FA posting date is, certainly whatever the month end is and your posting date. I normally like to type in a pretty good description here of what I'm recording, so I might type March 2017 DEPR. I will insert the balancing account, which of course is taken from the posting group setup, as you saw, the accumulated depreciation expense. For those of you who are into NAV 2015, you can schedule this to run at a specific time, but I'm just going to click OK real quickly to run it. And of course, go to my FAGL journal, and you'll see all my depreciation entries here that have been booked accordingly. So as you can see, you've got your accumulated depreciation, the depreciation expense line, as well as the accumulated depreciation line, which is really the line that shows the each individual fixed asset being recorded. Of course, you can post this accordingly, and of course, any dimensions that come from the fixed asset card are sitting on every dimension line, so they will be there. The next thing, of course, after depreciation, you can look at, in terms of after you filter and you kind of want to look at this in the journals, you are required to post this through, to click the posting entry here. So you'd have to click post and, of course, post this through. So it would hit the general ledger, and you can see that both now in the general ledger and, of course, the asset ledger. So if I go here, you'll see an entry for depreciation right here, March 2017, $2,690. If you're wondering, how can that be? Why did it book $2,690? Every time you run depreciation, the division will go back and will analyze both the acquisition cost, the number of years and months left to depreciate the asset. It will calculate how much depreciation has taken place so far, and if it hasn't seen an entry for the period of time that you are asking for it to post against, it will record it will true up the depreciation expense accordingly. So as you noticed, my last depreciation was December of 2016, so I'm missing January, February, and March, and obviously I've got an entry here of $2,600. This holds true for tax depreciation as well. If you, by chance, have not recorded it, it will true it up as well. As I mentioned earlier, when you're setting up NAV for the very first time in fixed assets, this is why we use the FAGL journal. We run depreciation so we can get the accurate net book value and depreciation expense recorded in the FA side that Navision thinks should have been recorded, and compare it to the general ledger side accordingly. Questions about depreciation? Questions about fixed assets? Go ahead, Jason.
Yeah, let's see here. So a couple of more things have come in. So one question, is all this the same in 2016?
Yes. Fixed assets hasn't changed from 2015 to 2016. Actually, even some of 2015 only had, I think, one minor change to it. I believe it's just more of the columns and everything, which is more of a global change. But this is the same in 2016. There were no additions to the fixed asset granule. And at the moment, I don't know of anything, even in, as they mentioned in NAVX Summit or my other conferences, they haven't mentioned anything for looking at fixed assets that have hit the list for Madero, which is really 2017, which will come out next year, October of 2017. But nothing new. Nothing has changed.
All right. The proper GAAP treatment for improvements and replacements or extraordinary repairs that increase the useful life of an asset is to reduce accumulated depreciation. How do you handle this in NAV and ensure that depreciation going forward calculates correctly?
Let me repeat the question so I make sure I heard it correctly. So
Sure.
Can you repeat that one more time so I can say it,
Okay.
so I can hear it?
Yeah, the proper gap treatment for improvements, replacements, or extraordinary repairs that increase the useful life of an asset is to reduce accumulated depreciation. How do you handle this in NAV and ensure that depreciation going forward calculates correctly?
The only way in NAV, if by chance I am recording the extraordinary, to reduce the accumulated depreciation expense because you're adding back, say, a $10,000 extraordinary improvement in which you want to reduce the accumulated depreciation and, of course, depreciation expense recorded to then depreciate that going forward. The only way to do that is two ways. One is in an FAGL journal, because you're taking effect on the accumulated depreciation. I would go in here. I would pick my asset, of course. I'll just pick my car, just for conversation's sake. In this case, I'm going to, there is no acquisition cost. I'm going to have to record a depreciation entry here. Which is in turn only affecting accumulated depreciation and depreciation expense. If you think about the posting types here, you have to think about the debits and credits in your head: acquisition costs, depreciation write-down, appreciation, and of course disposals. What are all the entries? In this case, you're really trying, if I did appreciation, I would have actually increased the acquisition cost value here. But in this case, I want to affect depreciation. Let's assume in my depreciation, again, it's $10,000. And of course, the balancing account is depreciation expense. And I'm just going to pick an account here just for real fast so we can keep our conversation moving quickly. We'll just pick that one right there. So in this case, I'm booking, I've got my depreciation here. I'm going to effectively reverse accumulated depreciation because the FA entry is related to the balance sheet and my offset being my depreciation expense account. That's how I would do it. My only other thought would be, again, so this is an extraordinary improvement. And you want to, yeah, I mean, that's the way I would do it. I mean, the only other thing that would be the only way to do it, because you cannot use another classification here to basically affect the general ledger. The only other way you can do this in the FA journal, plain FA journal, but again, you'd have to manually book it, one on the general ledger side to have recorded, and then one on the fixed asset side. I'm using the FAGO journal to record against both sides of the subledger and general ledger right now. This is how I would do it.
All right, great. We are at the top of the hour. Do you have time for a few more questions, Stephen?
Oh, by all means, keep going.
All right, wonderful. For anyone who does have to leave, I just want to make a quick note. Thanks for joining today. We are recording today's event, and when people do leave at the end, please do look for a little survey that will pop up. We really appreciate any feedback you can give to us. Our speakers appreciate it as well. But getting back to the questions here, we do have a few more. So Paul writes, because we depreciate tens of thousands of machines, we do not want detailed postings clogging up the GL. Can you post top-level summary in the GL? Will NAV pass off the summary entry into a GL batch, like another ERP system?
Sadly, I'm going to have to say no. I'll flip it around. I'll do two parts to you. There is no setting in here that says summarize my posting. You know, you can see in the book here. There's nothing here that says please summarize me or roll up anything. The best I can tell you, Paul, is when you do your depreciation, when you calculate depreciation, I would probably recommend only one thing: is never insert the balancing account. At least you can at least make one line entry for the asset side. If I ran this now, I mean, I'll just run this real quickly. And if I go back into the GL journal, oops, sorry. Let me get rid of this entry here. Let me delete my line. Go back to calculate depreciation. Let me change my date to 04. I think April has 30 days, if I remember correctly. unless I'm deficient in my head today. If I run that through, you can see that the entries here, the balancing account to the P&L is overlooked here, and I'd have to enter, maybe I'd have to manually figure out how to combine all these. I can tell you another way, at least you can do this, you can pretty much accomplish this in any release of NAV, but I'm going to give you a for instance. If you want to run this in detail and export it out to Excel, and then especially in NAV 2015, I could take this entire spreadsheet, send it to Excel, then summarize all my entries that I want to. Don't forget, you have to leave the FA account here intact because without it, you're not posting to the FA subledger. So you're really only going to summarize those accounts that affect the depreciation expense. So if you want to do it that way, you can do it that way. But you're not going to get out of the fact that you want to, if you're going to use the FAGL journal, you have to have one account being the fixed asset, and of course you can summarize the rest in terms of the depreciation expense. If you want to get away from that, then you might think about using the FA journal to just let the subledger be in detail, and then you're going to have to just basically record your own GL journal in mass summed up, in one-liners, total accumulated depreciation, and maybe a few lines hitting your accumulated and depreciation expense. That's the only option you pretty much have today, but you can at least cut and paste the detailed entry in the FA journal out, summarize it, and then you can potentially copy it back into a general ledger journal to cut down your typing if you want. And if you've never seen that before, we can certainly take that offline. And by all means, you can contact me and I'll show it to you if you want. For those of you who do have to jump off, and if there's more questions, I'll take them all. But if people need to get a hold of me or want to call me or find me, I'm just going to stop the sharing for just 2 seconds here and show you this. But you can find me right here. Here's my email address. Here's my cell phone number. You can call me. I don't care. Helping out the NAV community. If people want a copy of the MACRS tables, and if you want me to send it to you in an Excel spreadsheet so you can either rapid start it in for those of you in 2015, 2013, or data port it in 2009 and earlier, I'll send it to you. Just drop me an email. If they usually have more questions or want me to demo something, please find me. I'm open to that as well. Jason, I'll take other questions if you have them.
All right, a few more here. How do you account for bonus depreciation?
Bonus depreciation is accounted for in the depreciation table. Let me show you. You would go into your depreciation specific tables here, and I basically account for it here in this sense. Excuse me. The reason I put it into my depreciation table that I'm going to do a 50% bonus depreciation, or I might do, in most cases, it's 50% bonus anyway, given the IRS today. That's how I account for the 50% bonus. So I would actually create a new table. I'm just going to go in here quickly and create a new one. We'll call this one 50% bonus, 50 bonus. And in this case, in year one, of course, that's what we're talking about. We'll just make this a nice, simple 3-year asset. So in year one, my depreciation percent might be, it's 50% bonus plus the remaining months in time. So this might be 50% bonus plus 50% bonus. We'll make this June. Oops, sorry. Skip that. I might make this the June month. So if I know I have a 50% bonus plus I have X number of months left in my assets, a straight line, I might set up a percentage here. I believe it's 58.25, and that might be my first year. And again, in my second year, of course, this percentage is just going to be, typical. My second year rate might be, 12%, and then of course, 22%. I'm making the numbers up here, but the idea is I put my 50% bonus and I make it a user defined because that's the way I like to set them up, because I like to define my percentages in the first year, taking the 50% bonus and use it as depreciation, showing you that I'm taking that bonus depreciation expense. So it's recorded as an entry plus the remaining months accordingly. Could I have set this up as a month-to-month, meaning could I have changed this to month-to-month? The answer is yes. In the first month, I could have taken my 50% bonus, and then I could have then done whether it be straight line or whatever my methodology. In most cases, if you're saying the word you're going to take 50%, you're doing it more for tax reasons. So I'd probably end up using my MACRS tables to record the remaining depreciation for that month and the remaining months, of course.
All right. How is the setup different for tax depreciation versus GAAP?
Really, the only difference is the book. There is nothing else. You're not recording tax inside the general ledger. You'd set up your book, which is pretty straightforward. There is no integration. There's no integration to the general ledger. You'd make it part of your list, and then, of course, you record transactions. So, for instance, I'll show you a typical transaction right now. So the first thing that comes in is, excuse me, I might have an invoice that comes in the door. Create a new one. We'll pick my favorite vendor here. We'll take an invoice number. We'll just do an invoice here. I'll pick my fixed asset, and maybe I'll just do my conveyor belt. I know it's going to be a little odd here because it's already been acquired. We'll pick $10,000. So quantity of one would be nice, not a quantity of $10,000. And then the only other thing is you would have to come in here, and I believe I need to show my duplicate and depreciation book. Let me just add this real quick. And then, of course, I want to duplicate in my book called tax. And again, make believe this is my federal tax. So by having this here and I post this through, give it a second here for my system to catch up. Did I not pick? Sorry, folks, 1 second. Oh, let me pick the asset that I have. How about if we pick the right asset that actually has a tax book, which would be the Mercedes, and try this again. And then if I go back to my fixed assets, I open this up, and again, I'm going to look at this. I'm going to look at in the tax book here. Here's my ledger entries. You'll notice I've got my acquisition here, 58. You've got a Mercedes acquisition here of $53,000. And in addition, I believe here's this crazy invoice that I brought in for $1,000 to GAAP. And I'm going to open up my tax ledgers. Give me a second here, please, for this. Invoice, acquisition, GAAP. I don't know. I have to apologize. Oh, hold on a second, please. I think when I got the error message, my purchase invoice deleted the cost. Sorry about that, folks. But for time reasons, basically you just duplicate it in the tax book, and sorry about that. My posting, I think, went to 0. But it would record in the actual entry in the tax book when you post your invoice. So I would have seen invoice here of 331, acquisition money, and then tax book, of course, another entry, but I don't have any tax additions to, because I have a 0 value, so it didn't accept it. My apologies in demonstrating that, folks. Did I answer the question to the person asking it, Jason? I can go back and do it again if it's necessary.
Yeah, why don't we, if the person who asked that question wants to, follow up, that I can give you an update. Another question, is there a possibility to export all the depreciation amount per fixed asset item per future period to Excel?
And you can run projected value. I love this report because to me this is how you determine, you can go in and pick GAAP. If I'm looking at my depreciation from 04/01/17 to 12/31/2020, basically I'm going to come in here and then there's no post. I'm going to group my totals by FA class. And I want to do per fixed asset. I want to see every entry, and print amount per day, which shows me the the ranges. If I preview this real quickly, it should run. You should see every asset into the future, how far it goes out here. And then in 2015, I can say go to Excel and basically save this. And then, of course, it should have saved it by now. And, of course, let me just open this up real quick. And here is my Excel entries, all my projected depreciation into Excel. And you can manipulate it and do anything you want with it now.
All right. Let's see. So just a couple more questions here. Well, one is regarding any literature that you can share related to the webcast. And I know you said you would like people to perhaps email you if they wanted copies of some of the materials
Yep.
that you have.
If anybody wants the MACRS tables, I have that. I can certainly send that. Second of all, for those of you who are using fixed assets, who want to use fixed assets and say, I wish there was a manual, I actually have a full manual of fixed assets available. There is no fixed assets kind of manuals went away after 2013, so I have the last remaining one. So if you want to get one, again, drop me an email. I'll forward you the manual. I'll zip it up and send it to you on your email.
All right, excellent. One more question here. When we capitalize a machine, we must include certain electronic readers and other incidental parts to bring the machine to full functionality. Once the machine is capitalized, can we open up the machine card again and add freight and continue the depreciation?
You can pretty much do a couple of things. You can do a few things. One, you can set up what is called a master asset, a main asset, and then have multiple assets within it, meaning, and you can see this is the main assets, the conveyor, and there's a belt and a lift, and the computer associated with the main asset. So that's one way of doing it. But I think to be more precise to the question, could I go into any asset? I'm accumulating all my acquisition costs associated with this asset, and at some point I'm going to start depreciation. Can I go back and add some freight costs maybe 2 months later into that asset? And the answer is always yes. I can go back in, add an additional acquisition cost along the way, and then it would start depreciating that additional cost from that point in time. So, for instance, if I have this car, and maybe just make believe for the conversation's sake, my freight cost was $1,000 to get my car here. I can add the $1,000 to the asset itself. I can add the $1,000. It's going to be dated as of when the purchase invoice is posted into the system here. So as of that point in time, it would then start depreciating that additional $1,000 over the remaining life of the asset. So for instance, if I add a single $1,000, 3 months into this, again, it'll post through, it'll show up on the ledgers as another acquisition cost for $3,000, and then the next time I run depreciation, that additional $1,000, which then increases this to $54,000, will then be calculated, and then we'll depreciate the additional $1,000 over the remaining life of that asset. A lot of people do that with the freight, just so everybody knows. I mean, that's a pretty common thing.
All right, well, that is our last question, so we can start wrapping up at this point. So just to remind folks, today's event has been recorded. We'll be making that available. Steve, feel free to put up your contact information one more time if you'd like. And well, also let me just take a moment to say thanks to you for presenting today and for taking so many questions from our audience.
Oh, no problem. Again, as always, here's my contact information. Everybody can see it. So please contact me if you need anything. If you want any of the information, drop me an email. And certainly you can...
Click on that tab one more time. I don't think it's visible right now.
Is it visible
On
now?
the column, there it goes, yep. So I see your agenda, and there it is, yep.
Okay, so again, just contact me. I'm available, cell or email, but it doesn't matter to me. I'm always available. Or find me on the NAVUG Collaborate if you're a NAVUG member. Or again, hope to see everybody on another seminar.
All right, well, we hope to have you back really soon. That concludes today's event. We will be reaching out to you when the recording is available. Thanks again. Have a great day.
Thanks, everybody.